Good morning, everybody, and welcome to the first meeting in 2025 of the Scottish Commission for Public Audit. We've received apologies from Daniel Johnson. The first agenda item today is to take evidence on Audit Scotland's annual report and accounts for the year to 31st March 2025, as well as the Auditor's report on the accounts. Now, members can find these copies of these documents, as well as a management letter from Alexander Sloan, in paper 1 of their meeting papers. And I'll take the opportunity to welcome to the meeting Colin Crosbie, Chair of the Board of Audit Scotland, Stephen Boyle, Auditor General for Scotland, Vicky Bibby, Chief Operating Officer, and Stuart Dennis, Corporate Finance Manager, Audit Scotland. Now, I understand that this is the last meeting of the Commission that Stuart Dennis will be attending, as he is due to retire from Audit Scotland soon. I'd just like to express the thanks to the Commission for the work that he's done over the years and to wish him a long and happy retirement. So first I'd like to invite Colin Crosbie and then the Auditor General to make short introductory statements. Colin.
Thank you, Chair, and good morning all. Chair, for public audit to deliver on behalf of Scotland's people, it must have impact. This is a priority for Audit Scotland's board and leadership, and it's an area we focus on in this annual report. Audit's impact is always important, but especially so now. All of us here today are well versed in the significant pressures across public services and the effects of these on individuals and communities. We aim to achieve impact on what we do, from our audits of individual financial statements to our reviews of national programmes, policies and projects. As is natural, there can be a tendency to focus on the issues or problems we find, and perhaps to think this is the only way that audit has impact. However, the rigour of audit and the independent assurance it provides is crucial at all public bodies. For the vast majority of public audits, we issue an unqualified opinion. These two words speak volumes about the work public bodies do to ensure their processes and finances are in shape, about the robustness of the audit, and most importantly, about the confidence this gives public bodies and the people that use and rely on services. In this report, we draw attention to the many ways in which audit has added value and aided public services at an individual, local and national level. All this is central to us driving our vision that public money is well spent to meet the needs of Scotland's people. That feels more important now than ever before. The role of my board is to challenge, oversee and support Audit Scotland in achieving this goal. This has been my first year in post, and I want to thank my fellow board members for their support and Audit Scotland's excellent and diligent executive team. Lastly, Chair, I'd like to thank Audit Scotland's staff. Their hard work and commitment to quality and independence are at the heart of our ability to provide assurance and drive improvement. In other words, our ability to have impact. Stephen.
Thanks, Colin, and good morning to the Commission from me too. Chair, Colin has quite rightly spoken about the importance of our impact, and our annual report and accounts provide examples of the many and different ways in which our work has a beneficial impact and how we are supporting and improving public service reform, and these will continue to remain part of our priorities in the years to come. However, for us to achieve our priorities and to serve the people and communities of Scotland, we need first to make sure that as an organisation that we are effective, efficient and resilient. We are not exempt from the pressures of public service, nor from the need to show prudent financial management and good stewardship of Audit Scotland as an organisation. And again, like other bodies, we also need to make important changes and advances in how we are delivering our work. During 2024-25, we continued to recover the timeliness of audit delivery, with 55% of all audits delivered by target dates, and the vast majority of the remainder delivered shortly thereafter. Our phased delivery programme is on track. We currently expect to meet our goal of 72% in 2025-26 and to reach our ultimate expected standards over the course of the next 3 years. As with all public bodies, Chair, we remain in a tight financial environment, and quite rightly we must demonstrate prudence in our use of public money. In the 2024-25 year, we achieved £100,000 operating underspend, while still being able to invest in the changes we need to make. We also implemented our new people strategy, which is a key plank of our approach towards our target operating model for delivering quality and relevant audit work now and the years to come. Chair, with the Commission's support, we made good progress in our audit modernisation project, and as we've engaged with the Commission before, this is crucial to our ability to do the job that Scotland needs us, maximising our capabilities, our capacity and potential. Aligned with this, we are beginning to look at the future shape of public audit in Scotland, and we are well underway with strengthening our resource and performance management. Like the Chair, I'd also like to record my thanks to my colleagues on the board, our executive team for the work that they do, and absolutely more widely to all of Audit Scotland's employees for their hard work, expertise and unquestionable commitment to delivering public audit in Scotland. And as ever, Chair, across the four of us, we'll do our utmost to answer the Commission's questions this morning. Thank you.
Thank you for these statements. I'll now move to questions from members. And I'll start with a question on the resource outturn. Table on page 28 of the annual report. Audit Scotland's total operating expenditure was underspent in 24-25 by 1.96 million against its 24-25 budget proposal of 13.589 million. Now, on page 3 of the annual report, Audit Scotland stated that year-end pension scheme adjustments accounted for 1.7 million of the underspend and 0.2 million related to IFRS 16 lease capital, giving an operational underspend of 0.1 million. Likewise, people costs were underspent against budget in 23-24 by 0.569 million. Now, Audit Scotland stated on page 29 that this is mainly due to preparing for the planned increase in vacancy target from 2% to 5%. Can you give us more detail on the separate factors that have contributed to the underspend reported?
Yeah, many thanks, Chair. Actually, I'll start, and I'll maybe pass to Vicky first of all, and I'm sure Stuart wants to come in after. I think you've quite rightly homed in on, I think, one of the key drivers of the financial performance of Audit Scotland for the year end 24-25. Firstly, in terms of pensions, the Commission will be familiar that remains a volatile area of our financial reporting, given what has felt like, for a case of many years, have been swings in terms of whether the pension scheme has been in a surplus or deficit position. We now seem to be in I hesitate to call it an era, Chair, but I think as a phase of pension surpluses. And what we're reflecting in our accounts is by virtue of our membership of the local government pension scheme. So other than a small handful of staff, one of whom is myself, who are members of the civil service pension scheme, Audit Scotland is an admitted body to the Lothian Pension Fund, local government pension scheme. And that pension scheme, really by virtue of a range of factors, but driven, and Stuart can cover some of this detail if he wishes, about really what the return levels are in government gilts, is producing surpluses in the scheme. And that's kind of part of the driver that we are touched on. I'll pass to Vicky in a moment. I might want to say a bit more about our staffing costs, because of course staff expertise, which I mentioned in my opening statement, is how we deliver our work. Vicky, I'm sure will want to touch upon how we're progressing with the vacancy management factor. And I think as we discussed with the Commission when you consider our budget proposal in December, that's a risk for Audit Scotland to get to our target of 5%. The other most significant factor of our overall cost in our position is the fees that we pay audit firms for the delivery of audit work. And what you're seeing in our resource outturn is two factors there. One is additional audit fees that we've paid for the delivery of audit work, but are largely compensating contra entry, as it were, of additional income that Audit Scotland has received for the delivery of audit work. I hope that's a helpful kind of scene setter, and I'll maybe pass to Vicky first of all, and then Stuart in a moment, Chair.
Perhaps then I could ask for a comment on if there was no credit from pensions, what would the underlying situation be? What would the underlying status be?
I'll certainly bring Stuart up. If we strip that out, what that would be, and maybe if you're happy to do that first of all, Stuart.
Yeah, if we didn't have the pensions element, it would be the operating outturn would be, as we say in the report, 0.1 million. So 100,000, as the Auditor General said. The leases capital saving is a non-cash item as well. So it's really an area where we've not had to purchase outright the lease element of the car leases. So it's really, that isn't effectively operating side of things. So in effect, our operating underspend would be, if we took the pensions out, would be the 100,000 that the Auditor General mentioned.
Thank you.
Thank you. Good morning. I think building on that, I would like to add that we have quite robust budget monitoring procedures throughout the year with the executive team and the board, and it is the operating position that we focus on. There will be the year-end adjustments because of pensions and leases, but for us the critical part in meeting our statutory obligations is the operating outturn, and we're pleased that we were so close to our break-even target. And there's a number of factors that we look at, and with workforce being our biggest costs, we've really got to closely monitor that. In highlighting, because of the 24-25, our workforce vacancy was 2%. We actually came out on 3.7%, and I think this is just making sure that we maximise having our the workforce in place to deliver, but meeting the budget pressures that we've got coming up. And you know that going forward we've got a 5% vacancy factor. So from the moment our budget was agreed in December, we've started having that recruitment board to slow down the recruitment. So I think we're seeing the vacancy factor creeping up towards the end of the year is anticipation for the new 25-26 budget and meeting that target that we agreed with yourself for the 5%. But saying that, we have, it is, and we said in our budget process, it's about that fine balance of our recovery and our delivery and quality with meeting our budget pressures. So we have, as you know, a contingency in our budget, and that was used to pay for some of the works that we had in Westport and with Nelson Mandela Place in Glasgow, and we did a revenue to capital transfer. We have had some additional costs associated with using expertise, project management to use staff for short-term projects. As you know, we've got our strategic performance improvement projects. So it's balancing all of that with the close budget monitoring of where our staff costs are to be able to deliver on our targets. I know we'll probably get into a lot more detail on some of those points, but it's the operating outcome that we look at.
Given the need to manage the vacancy target in order to help achieve your budget, how is that impacting on the operation of Audit Scotland?
So I think they are connected, Chair, and we're closely managing that. I think, as Vicky mentioned, and I think as we spoke to the Commission through our budget proposal, the adoption of a higher vacancy management factor, which I think we'd spent maybe 2 or 3 years discussing with the Commission on this, and we referenced the Scottish Parliament's own vacancy factor and sought to align our arrangements more closely with the Parliament. One of the main mechanisms that we've brought into, or really internal governance arrangements, we'd call it, be a recruitment board. So when there is a vacancy arising within Audit Scotland, colleagues are required to prepare a submission request, effectively, to say we would like to fill this post, or especially if it's going to be something, you know, over and above the establishment, really looking particularly carefully at those. Is it impacting directly on delivery? I don't think we have evidence to suggest that it's causing our performance to deteriorate. In fact, if anything, I think, as I mentioned in my opening remarks, Chair, our delivery performance is improving as part of our planned phased recovery. We would acknowledge, and I'm very happy to get into more detail on this, we're not quite where we want to be yet, but I think we are following the trajectory that we set ourselves to return to delivery deadlines. But it's something we have to be really careful on. And I think, as ever, there have been times where we have some specialist posts in Audit Scotland, some that are hard to fill, and we need to just be really careful that our governance fits with our delivery requirements. That's something that's an executive team we're doing day in, day out.
You've said that there's no impact on operational efficiency and so on by managing the vacancy levels. Does that imply you don't actually need these extra bodies? To ask an obvious question.
No, I don't think it does, Chair. I think it's, as with all organisations in public sector, we're using our resources very carefully. And we're making sure that in times of reform, I mean, in my role as Auditor General, I talk about the need for public services to reform regularly to support fiscal sustainability. And the same applies to Audit Scotland. So what was appropriate in years gone by in terms of budget settlement, we have to keep asking ourselves, does that post is it still necessary? We, as I touched on, we have produced a new workforce strategy. We're still thinking carefully about our target operating model. We know that the skills and the roles of today won't match exactly with what will be needed to deliver public audit in the years to come. So as we adopt new technology, approaches to artificial intelligence, what's required of public audit is going to evolve. So we're right in the centre of that space at the moment. And I think that's really why we just keep evaluating as people change and join the organisation. Do we still need that post? So it's a careful approach. And Colin might want to say a bit more about that, actually, because he similarly challenges us through both the Audit Committee and now the Board.
Yeah, I don't know if I really did want to add anything to it, Chair, but I think the real point here is that if you take it in terms of the number of pieces of work which have been done, as is reported on later, something like 92% have been done within the total years. So, barring 8% for which there are reasons, the vast majority of work within Audit Scotland has been done within the course of the year. Quite then, what our establishment is going to need to be and what skills are going to be needed going forward is a subject of great scrutiny by the Audit Committee and by the Board in general, because there is no doubt that I'm going to call it advanced automation / AI is going to have an impact on that. And indeed, part of the establishment we have, as you know, is being devoted to implementing new systems, all of which is just gives us a fluidity to the I guess a sort of 10% of the numbers employed. There's a core which has to deliver, but there is scope to move things around in order to accommodate different workflows at different times.
Okay, thank you. I'll invite Richard Leonard to ask some questions.
Thank you very much, and good morning. I want to continue to look at your year in figures table, and I want to turn attention to the fees and expenses paid to external firms. You have, for a long time, operated a mixed market approach to public audit in Scotland. So you outsource around about a third of public audits to private companies to carry them out. We approved a budget last year, or for the last financial year, of £7.7 million. But what the report shows is that the actual spend was over almost £9.5 million. That's a rise compared to the budget of 21% in 1 year. Can you explain that?
Yes, happy to. I'll start and I shall bring Vicky in to give you a bit more detail, Mr Leonard, because I think, as I mentioned, my kind of open answer to the Chair, there is a contra set of circumstances for the additional expenditure on firms with additional income. That largely reflects that some extra work has had to be undertaken by auditors in order to give assurance to the bodies that they're auditing and ultimately through to the Parliament on the information that's being presented in public bodies' annual report and accounts. Before passing to Vicky to kind of take the Commission through that, it's not the norm, is the point I would make to the Commission. The majority of audits, as we've touched on some of the timescales, are delivered to the timescales that the Accounts Commission and I set for auditors and public bodies. Most accounts are laid within their statutory deadline. But there are some examples, and there are some quite big examples in a few public bodies, where a degree of additional audit work has had to be undertaken so that the auditor can satisfy themselves to give an opinion on the financial statements, the work that they are charged with doing. And in all cases, that comes with a cost. I should just for balance, for bringing Vicky in, it's not only firms that are charging additional audit fees. Some of the in-house Audit Scotland teams are also charging additional fees to public bodies, where, as I've touched on, the kind of broad circumstances, if they are not ready. But I think probably helpful for the Commission to hear directly from Vicky on how we are tackling that, and especially how we're monitoring it as an organisation.
Thank you. So yes, there's two factors in this. One being because of our recovery deadlines, we will see more than 1 year's audit related income and expenditure in 1 year. So there have been some significant ones in the earlier years that are still catch up that are reflecting, and that's been a recurring theme. But the other one is the additional work that is required. And we have, as the Auditor General has just said, there have been some significant cases. So Audit Scotland's being very proactive in this space, recognising that this is public money, and we need to be absolutely sure that we've got robust processes in around the additional fees. The process and the approach and the contract that we have in place is it's the auditor and the audited body that will agree the final fees. It is the auditor to ensure themselves that they've done the necessary work to be able to sign off on the accounts. So Audit Scotland has a framework and a process in place, and there's trigger points that if it's looking like fees will be more from the additional work that's required, they are in touch with our audit quality team and then myself about the additional fees they need to do. We don't agree them, but we give agreement that they can have those discussions. But ultimately, it is between the audited body and the auditor that will agree the fees. So all of these additional fees, the point I'm trying to make, will be agreed with the body. But what we are trying to do is support that further. The team have written out to audited bodies highlighting what they need to have to be prepared, what's included in the core fees and what they can expect to be increased as a result of changing audit standards. But really stressing that a successful and efficient audit is based on a good partnership between the audited body and the auditor, and that really they need to be having a clear discussion around what information is provided, the accounts are ready and the working papers are ready, and then the auditor will do their work on time. So we're closely monitoring what is the result of additional fees as a result of audited bodies not being ready, and what element of additional fees are where there's additional work required to provide that audit opinion, maybe due to some processes not being in place. But it is increasing, and we hope that we will be returning, as Auditor General said, to a more stable position.
we accept as a Commission that it's not a fixed fee model and there's not necessarily a capped regime in place. But 21% is quite a big variance, isn't it? I mean, you know, given the knowledge, the institutional knowledge which exists within Audit Scotland and your familiarity with this kind of mixed market approach, when we're asked to approve a budget, we would expect it to be more or less what the actual spend is. I mean, you know, I can hear what you're saying, Ms Bibby, about particular cases and so on, but I suppose, rule of thumb, I might expect that to be 5% or single-digit variance from the budget, but this is 21%. I mean, that's pretty fairly large magnitude. And I suppose my secondary question around that is, are there particular firms of the 6 which have charged you know, significantly more in the audit work that they have been doing?
So I'm happy to start. Vicky might want to say another word or two on it. I think the first thing I would say, you're right, it's not a fixed fee model. So the auditors have to carry out the work to satisfy themselves as regulated entities. So the audit firms that we appoint are, you know, are subject to regulation by either the Financial Reporting Council or in some cases the Institute of Chartered Accountants of Scotland. So the regulators say you must do this level of work to satisfy yourself before you give an opinion. And you know, I'm quite sure the Commission will be familiar with some of the examples of where audit quality hasn't been delivered to satisfaction. So auditors will see that as an absolute top line. They must get the audit work done. And that can vary, Mr Leonard. So, you know, for example, the year in question, and you know, it continues to evolve, we've seen new accounting standards and new auditing standards. So, you know, so even in Audit Scotland's own accounts, as Stuart's already mentioned, lease obligations is a new accounting treatment, and that, you know, may or may not have been factored in by the auditor and the public body. So, and that can bring a significant level of additional complexity. Some public bodies, especially some of Scotland's local authorities, have a vast array of assets that they have to disclose and account for, and that's been a subject of a lot of debate within public sector accounting about the valuation of public sector assets. So that's been a large contributor to some of the additional work that auditors have had to produce. In terms of, before addressing the point of whether it's consistent across the piece in terms of audit firms, it's not a consistency across all the firms. So I've mentioned that there are some firms that, you know, are charging their audited bodies higher fees, but I think what's more consistent is the complexity of the public body that they're auditing, as opposed to there's an apparent driver within a firm. And as I mentioned, for balance, Audit Scotland's in-house team is the second highest of all of the providers that the Accounts Commission and I are appointing in terms of additional fees. So I don't think we have evidence here of that there's an attempt of profiteering or there's a particular approach from one firm. I think as across the piece we're satisfied, notwithstanding the point Vicky makes, it's not for Audit Scotland to approve that relationship exists between the audit body and the auditor, but we're satisfied that there is a sound reason for where additional fees have been sought.
The final question is, might you come back next year and share with us again a picture where there's quite a big variance in the fees paid compared to the budget that's been set?
So I'm probably not going to give you assurance that we won't do this. I think, but what I hope we're on is more of a levelling out path in terms of additional fees. In some cases, you know, notwithstanding the point Colin makes about we are recovering our audit deadlines, but there's still a case of it. For some of these, the numbers in these accounts, there are sometimes 3 audit years that are being straddled. So there's a degree of variability, complexity. New auditing standards, new accounting standards. I hope we'll get to a point that they'll be absorbed and we return to, which I think I share your point, that a more reasonable expectation that we'll be in would be single-digit variation both to income and expenditure. And that's broadly consistent with our expectations of that kind of phased recovery. Audits, by the end of this appointment round, will move to the delivery and largely more of a steady state environment, notwithstanding the whole kind of wider variables that continue to exist.
Thank you. Can I ask Mark Ruskell?
Yeah, thanks, Chair, and good morning to you all. I'd like to focus on some of your operating cost variances. And if I could just turn to rent and rates to start with. So I'm seeing here that, you know, what you requested for 24-25 for last year, you know, was compared to what you actually spent was 54.4% higher. And then if you compare that with the year before, you know, what you spent last year was only 14% higher than what you spent in, you know, 23-24. So, I mean, it feels like there's a bit of a trend here in terms of, you know, last year I remember the discussion, you know, you came to SCPA, you gave us some quite granular information about, you know, your property costs and about what the strategy was for accommodation, and I felt we had a very clear picture of that. But then we come to, you know, what the budget request is. It doesn't really match up with what you've spent, and it feels like it's a kind of trend that's, you know, we come back to the same point year after year. So I hope I'm not being too unfair in kind of picturing that, but I think the figures are quite stark in that, you know, you're not spending what you asked for, and that's a bit of a trend. So I'm trying to understand the reasons for that.
Yeah, well, no, thank you very much for the question. And I'll maybe bring Stuart in, I think, to perhaps set out some of the background to why our expenditure on rent and rates hasn't been entirely what we anticipated. We have been in a phase of evolving our estate. As you mentioned, we had produced an estate strategy. Vicky had touched on, I think we've now completed the investment that we wanted to make in both our Edinburgh and Glasgow offices. So we have offices that we think are now fit for purpose, better reflect the requirements that our board, the Accounts Commission, and more importantly our people, how we are working. That we think we've got some stability in terms of our corporate estate. What we also want, and I think whilst we might not be reflecting entirely in these annual report and accounts, is stability in the costs behind that. But I'll bring Stuart in first of all, just to kind of set some of that detail out.
Yeah, no, thank you. The rates actually increased from the prior year because the rates relief finished. So the business rates relief we would have had in 23-24 didn't exist in 24-25, so that would have been part of the increase there. There was also an element in the budget where the assumption that we would be reducing Edinburgh maybe a bit earlier than we actually did. So the work wasn't finished until probably end of November. But now for 25-26, our rates have dropped right down to expectation levels. So we're really quite confident now moving forward that we're in a good place and that the savings we highlighted to the Commission that we would be delivering that as part of our strategy.
Okay. So in terms of the budget that your request for next year, I mean, do you have certainty as to, you know, development of the properties, you know, what potential rates might be?
Yeah, we've
and it, you know, you're able to give a degree of certainty that perhaps you weren't able to give last year.
That's right. Yes, because of the timing of the work. The work has been done. We've been in contact with the valuation joint board to get the adjusted rates figures now. So for 25-26 and moving forward, we're now confident that that is the actual figures that we will have moving forward as part of the leases we now have for the offices we've got.
Okay, so probably no surprises then for next year.
Yeah.
Okay.
So I think that's as Stuart mentioned, that's our expectation of more predictability in our costs and budget requests when we come to the Commission at the end of the year. Okay,
and there's a related item to that because I think we've got a line here on other accommodation costs being 21% over budget. So that was clearly something you didn't anticipate for last year. Can you explain, like, well, basically what that is? Why there was a significant increase in that?
The increase from the prior year was we had minor building work done. So our office in Edinburgh wasn't a capital project like the Glasgow office. It was a minor wall that was put up to split the office out. So we now have a reduced space in Edinburgh. So the increase from the prior year was to cover the costs of that. So it was minor building work that we had done, and that was finished, as was said, in November, the work to do there.
That was 127,000.
Yes. Yes, that's correct, yeah.
Okay. And again, you don't anticipate... No. I was going to call it snagging, but £127,000 is quite a lot. So you don't anticipate a major piece of work like that coming forward? You're happy with accommodation?
We are happy with accommodation. I think it's, as I mentioned, grateful for the support that the SCPA has given us in terms of reconfiguring our office estate. We have, we have commercial contractual arrangements with the landlord. We have an expectation that we'll be remaining in this building or with our footprint for many years to come. So, no, not anticipating any further works in the near future.
Yeah. Okay. Can I move on then to travel and subsistence costs? And I feel it's a kind of similar picture that perhaps needs to be explained further, because there are 280,000, 69% under budget, and that's quite a significant underspend. And it feels again there's a bit of a trend here of us certainly not understanding what your expenditure is probably going to look like for the year ahead, and then you coming forward to us with a request for quite a big budget, and then it actually being underspent. So I'm again trying to understand this, and I suppose the wider context here is that we'll come later on in this meeting to areas where you're clearly overspending. So there's quite a lot of flex, it seems, within the budget overall around areas that are underspent, over areas that are overspent. But this is clearly an area where what you requested isn't meeting up with what you needed. So what's the story? What's the picture there behind travel and subsistence? Because again, it felt last year we had quite a clear understanding of where you were going. There was a certain return to kind of in-person meetings and audit work, but that was quite tentative. So yeah, I'm interested to know what the story is behind the figures.
Well, I'm very happy to start. Actually, Vicky might want to say a word or two about this as well. I think I would just echo your phrase, Mr. Ruskell, that it does feel tentative. And I think the budget that we are measuring ourselves against, we set that really over the course of the summer of 2023 through to scrutiny within Audit Scotland, and then to the SCPA considering our budget request in the December of 2023. Patterns at that point, and I think while we have more stability now, and an extent, I think organisationally, maybe like many others, we're settling into a pattern of hybrid working as an organisation. So, as you mentioned, it's true. There are much more in-person, face-to-face engagement with audit teams and with audited bodies, certainly than there would have been, and maybe going back 2.5, 3 years ago. So, I would like to say to you that our budget for travel and subsistence that we present to the SCPA next year will be borne out by reality. But even within that, there are many variables, because we can do business effectively in a remote way. So and we don't say to teams, that particular meeting has to take place in face-to-face or whatever. So there is discretion amongst team members about for how they'll deliver their audit against an overall aspect that some meetings have to take place on a face-to-face basis to get the right evidence and so forth. I think before passing to Vicky, I think we hope that we're moving into a more predictable budget for travel and subsistence in the years to come. But I don't think we're quite there yet. And I think especially some of the other variables that happened over the course of the audit appointment round is that an auditor's familiarity and vice versa with an audited body really builds up over an audit appointment round. So the level of initial investment of establishing relationships and so forth really takes place in the early years. And that might lead to some more variability as we move towards the end of an appointment round. But again, Vicky will have a take on that as well.
Vicky comes in. I'm just interested in to what extent you can really kind of predict that, and if there's much variation within teams within the organisation. So maybe there's some teams that like to meet in person the whole time, and they therefore need quite a large budget. Is there discretion there where we'll budget for everybody meeting with everybody the whole time, and then actually if there's teams that prefer to do that online, maybe we'll get a cost saving there. Again, it feels like it's really difficult to pin this down and to come in with 69% under budget last year, 83% the year before that. It feels like there isn't a kind of a handbook or a expectation about how you do this within Audit Scotland. Is it about early engagement with those new organisations you're building a relationship with? When does that tail off? What's the expectation on in-person meetings, online, or is it just basically, well, we'll budget up to the max, we'll assume in-person meetings the whole time, and if it's less than that, well, who cares? It's 69% less than that. I'm sorry to seem a bit flippant on that, but that's kind of what it looks like from the outside.
Well, let me address that first of all. So we're not budgeting in a way that is with lack of thought. Certainly we are reflecting the budget from the experience that we've had both in the previous year and in the trends. And this budget has changed dramatically. If you went back 5 years ago, we would have had almost everybody working face-to-face every day of the week. Considerable transport, mostly car transport as well. So how we're delivering our audit work has absolutely changed, and it's not going to go back to the models that we had in years gone by. I think we're about 12 months away of having reliable predictability on this budget line that can say that's what it's going to be like from one year to the next. And by that point, we'll not be far away from entering into a new appointment round where, not quite throwing the cards up in the air again, but as I touched on, there is variability as we move into. So to give the committee assurance, first of all, and Vicky will say more, I'm sure, but we look at this closely. We're thinking about it really carefully, using year-on-year trend, and then kind of going back wider years just to come back with a budget that looks reasonable and realistic, and we'll continue to do that.
Yeah. Sorry, Vicky, go on.
No, not at all. Please let me reassure you that we do have robust budget setting and monitoring procedures in place. Yes, I think setting a budget towards mid to end 2023 for this year of 2024-25 was at a time where things were less predictable than they are now. So at the time, not wanting to revisit the building costs, they were estimates. We now know our full costs, and there is stability there. On the time and the travel and subsistence, again, it's striking that appropriate sweet spot. We talk about there's guidance with staff around being in the office, being in client, working from home, and really looking at how we balance that with our green agenda about minimising our carbon output, but looking at quality audits and delivery and what is really important for sometimes face-to-face interaction and where we want to ensure that we have got that client site. But it's not all just about the clients. We're in a world where, as a training provider, as well, the training for particularly graduate school leavers coming in and seeing people face to face, we believe is absolutely vital. So again, it's finding that balance for travel, to be bringing people together for that, not just what we need to deliver now, but making sure that we have got the talent pool, the skills and training for people together. And there's, particularly on the financial side of audit, the teams do come together face to face much more in person than you might have than over a long period of time performance audit. In terms of how we monitor that in the budget, we don't budget for everybody's coming in and then hope for the best. We have assumptions and they're closely monitored. I think when you will see in the last budget setting that we had just, and then the outturn next year and the approach that we go to with the budget setting, the world has stabilised more from where it was in 2023. But I would like to assure you that there is a robust process in place.
So we'd expect to see that stability coming through in next year's figures then, and that's decisions that have already been made effectively. Okay, thank you. I think that's me.
Jimmy Green.
Thank you. Thank you, Chair, and good morning. Just following on this line of conversation, I think the phrase that's been used once or twice on the panel is that you have very robust budget setting processes. I think I'll maybe take a slightly different line based on the table I have in front of me. I think one of the things that concerns me most are just the high degrees of variance between what you budgeted and what you spent on a quite a wide range of lines in this budget table, actually. And it's not by a small margin either. I think there's a realm of acceptability around budget variance, but these are quite wildly variant numbers. I'm going to get into a few of them in a moment, but you know, there are many of them that are over the 50% mark in terms of variance. And please don't take this the wrong way, but in what way does that represent good budgeting processes?
So in overall terms, I think that's where we arrive at. As you know, Audit Scotland is dealing with a range of variables. We talked about Mr Leonard, for example, in terms of audit delivery and audit fees, and that's some of that. So whilst we're not in the more stable territory that we want to be and anticipate that we will be, when you're dealing with variables as significant as some of those in terms of audit expenditure and audit fees, and as I mentioned, that audit, some of that will be some kind of overhead related in terms of additional work that's had to be undertaken to deliver our audit. Audit Scotland can't hold reserves, so we have to be really kind of careful overall that we do not exceed our budget allocation, and we've done that, albeit with it's a pretty slim overall underspent, Mr Green. So £100,000 is, and it, you know, and if you said to me at the start of the year, where would you want to be? You know, you don't want to be too high, and you certainly don't want to be over your expenditure limit. So £100,000 feels quite a successful overall outturn. But I accept the point you make that, you know, that within the lines of the more granular detail within our budget, there are some swings. You know, we've spoken one of those with Mr Ruskell in terms of our ability to be absolutely certain in some of our budget lines isn't there for all of them. You know, so that just in terms of how we are tasked with delivering our work, we want to get to, and I think as conditions in the external environment are evolving, we think that when we're producing budgets to bring to the Commission at the end of this year and then 12 months thereafter, that we'll have a more stable and predictable pattern with which to make budget requests. Our biggest priority, though, is managing the budget across the piece and not then exceeding the lines. And I'm very happy, you know, amongst if there are, you know, specific budgets of interest or concern, you know, to kind of share some of the more detail and background with you.
But I mean, that gives to me a reflection that perhaps you're looking at the overall number as at the sort of centrifugal point of your budget processes. So in other words, you know, let's make sure we're there or thereabouts with the overall number so that you don't come back to us and say there was a wild under or overspend. But, and that's fine, but that's therefore relies on some budgets naturally coming way under to allow you to go way over on others, and that the numbers reflect that. So, you know, where your total operating expenditure is considerably higher than what was budgeted for, you have had an underspend in people, for example. But that's lucky, perhaps, rather than planned. So, you know, if you actually spent what you said you were going to spend on people, then you would have been wildly over on OPEX. So, you know, is it good enough to simply rest on the, you know, the top level number? And actually, you know, it's important that we do drill into some of these.
Oh, I agree. I absolutely accept, and I would say that we are organisationally exploring the detail of this, alongside the scrutiny that the SCPA is, so through our audit committee and our board, and absolutely through our monthly reporting to the executive team, similarly looking at the reasons why we have variances, some over and some under against our budget level. I don't think it's characterise it as an either or. So we absolutely, as I mentioned, have to deliver a budget surplus as an organisation. But we are also looking at the detail behind individual budgets. I think, as I mentioned, and happy to say more about it, is that some of the variables that we're dealing with as an organisation, I think, are driving some of the variances that you're seeing in performance against budget. That we are, as we set this budget and engage with the Commission in the tail end of 2023, what we fast forward to the completion of these sets of accounts, we effectively have 3 audit years, all reflected in the results. And I know that marrying up a financial year and an audit year is always a degree of difficulty, but when we're multiplying that by 3, I think that's giving some of the challenges that are set out in today's numbers. So, of course, we're satisfied that we have produced an underspend, but I think probably 12 months from now, we anticipate being able to share with the Commission a more predictable and stable performance against some of the individual lines of those budgets.
Yeah, that's very, very useful. One of the other things that jumps out at me is when you look at year-on-year variance in terms of what you spent across 2 budget years, actually the margins of variance are a lot lower. So you said you used historic spend or historic track record as a good baseline for working out how much you want to come and ask for in future years. But actually, and when you do that, it probably would come out with a better outcome, because what has happened is what you've actually spent in 23-24 versus 24-25 are not wildly dissimilar in many lines, but what you budgeted for in 24-25 versus what you spent are wildly variant. So that's maybe something you could reflect on in that, because I think the point being is that you will have to come with future budget proposals, and there comes a point at which point do the Commission take a view on how much faith and trust we can put in them, knowing what we have in front of us in terms of that huge variance. That's more of a comment than a question, but in the interest of time, let's look at some of the other big variants that jump out at me. One is the other line. It's always that wonderful catch-all at the bottom of a budget. It's also 80% variant and £457,000 underspent. So what did you budget for in the other table and then not spend?
Stuart, maybe you want to kind of say that detail if that's possible.
To be honest, I don't recognise the figures that you're looking at, because what we had when we submitted the budget in September, or we done the budget in September 23 for 24-25, and then to the Commission in December, some of that would have been around the leasing side of things. So you will see that some of the variances that you might have in respect of a right of use asset, so in respect of property, you might have a higher budget, but the actual cost has now dropped down into the depreciation level. And the budget that was to the Commission in December 24 adjusted that to reflect this accounting change in treatment. So I'm a lot more confident in the 25-26 budget and moving forward that, as you rightly said, Mr. Green, that using the actuals from the previous year is going to be a much more reflective position on where we're at. My guess in the other one would be where the 500,000 contingency was budget, would have originally there, and then that's been distributed out across to cover the capital needed for the Glasgow work. We've also allocated some for the Edinburgh office work and some audit modernisation work, so that's where you will see the variances there. So you'll see the budget of 500 still there, but what we've done in year, we've moved that around to cover our requirements, and we've reported that through the Commission in December when we submitted our 25-26 budget. Yeah,
okay. I can only work with what I've got in front of me, and it doesn't particularly go into much detail on this particular summary, but you're right. The budget was 578,000 approved budget in the other line. actual was 121, but as you say, that could be because in year you've been able to distribute some of that elsewhere. It's quite hard to follow that. On the obverse, the depreciation budget was approved at 430,000, and is listed here as nearly £1 million. So that's 126% over what was budgeted. Is that again just money shifting?
That's money. That's the shifting from rent and rates that we talked about earlier. That budget has been moved to reflect the accounting treatment. So the accounting treatment now under a lease is you depreciate the lease over the term of the lease and not an annual rental. So when we set the budget, it would have been in rent, but what we then did is adjusted the budget to bring that into depreciation. And what we now do for 25-26 budget that the Commission approved, you will see that, and all this will even itself out going forward. It's to reflect in the accounting treatment that we needed to adopt there.
Just when this budget was approved, was that change not already known about? So in other words, why we would, the budget would have been approved based on that information at the time, yet there's still a huge variance.
Not at that time, because it was back in September 23, so we were in the early stages of adjusting to reflect this and the treatment, and as the Auditor General mentioned earlier, the experience of audit, the audit side is that this is a difficult standard that's being onboarded across the whole of the public sector, and how it's treated in funding streams in respect of central government budget funding is completely different. So it's trying to just get that right, which we have now, are confident we've got for 25-26 budget and going forward. So the actual budget paper for 25-26 adjusted to reflect what we had to do this year in 24-25 to cover that budget adjustment.
Thank you very much for that explanation. Vicky, could I maybe ask you about the IT budget? Again, that's flagged up as another quite a big variance in terms of what you asked for and what was spent there. It says there's about £500,000 approved budget for IT, but at the end of the year that was sitting at over 800,000 in terms of spend. So that's a 47% jump. How did that come about?
So again, we can bring Stuart in on the detail, but where we are with our IT budget, it's a mixture of the cyber security, and also we purchased, which are depreciated, a number of new laptops for staff in line with our rollout. I think the cyber security is an area that we're needing to just regularly increase our investment in. It's a huge risk. It's our highest risk on our risk register, which will be similar to most public sector bodies. So this is an area that we are increasing our investment in. And we brought forward some of our laptop rollout to reflect the increased risks that are resulting in the environment. But similarly, again, happy to bring in Stuart around the accounting treatment of those.
Can I make come in first of all, actually? I think one of our investment in IT, and Vicky's quite right, and particularly in cyber risks, probably has to one as an organisation, and we have done, Mr Green has taken a view about where we need to invest to keep the organisation safe, is managing across a couple of budgets so that we can invest to safeguard the organisation. I'll not mention individual organisations, but there have been very high profile instances both across public sector in Scotland and indeed large commercial entities that have been subject to debilitating cyber attacks. So we have an excellent team who are incredibly diligent and in keeping us safe. We are subject to attempts to access our information and organisation through malicious actors, and we have just making sure that we've got the right investment with the right technology and patches, and that from time to time will require us in addition to go beyond the budget. And what we're looking to do is to manage across the piece so that we are keeping the organisation safe in terms of that risk. It remains the top two risks actually, both in terms of on our risk register, and one that we're really proactive in making sure that we've got that right. But if there's any kind of detail on that, we can happy to get into.
The added element of risk for you is that you don't just hold data of your own organisation, you're dealing with large numbers of pieces of data from other public sector organisations as well. Some of that presumably is quite sensitive data. I mean, give us an idea of the scale of how often or frequent these attacks are.
We can perhaps come back to you in writing with just some of the specifics of it, but I think anecdotally, there's barely a fortnight that goes by without an update from our digital colleagues about an attempt and the need for effective interventions. We have to keep our organisation running, so making sure that people are appropriately trained. And I think even some of the forgive me if I've kind of lost track of the phrase that's used, but effectively, we are all individually our weakest point. So whether it's clicking on a link or not paying due regard to where we send an email is often the route through that a malicious actor can get into our organisation. So whilst we're not specifically talking about L&D budget here, that's another factor. We have to make sure we've got the right training and we have mandatory training for colleagues on cyber prevention and so on, all that we can continue functioning safely. And you quite rightly make the point, it's not just our own information that we're dealing with, that we have access to important and in some cases sensitive information from across public bodies too. But I think Colin maybe wanted to come in on this too.
If I may, it really just, if we start with cyber and IT in general, the board has a role in this in a way in that we get at every board meeting, we get a digital update in terms of what's going on and what's not happening. And if anything, one of the most hawkish groups in cyber is the board, because they're very aware of the problems which are manifest for everybody to see in terms of that. And we're also very conscious that because, particularly if you're doing IT auditing and online auditing, everything you're doing is online, and it's not just your audit system or your internal system, it's actually interacting with the entire government and local authorities' audit systems as well. So cybersecurity is absolutely key. And, we achieved, and great credit to the team for doing this, ISO 27001, so I had to look because I can never remember how many digits there are in the number of the, which is the top level of cybersecurity in terms of the international standards, which is no small task in terms of achieving that. And as a board, we'd much rather have that. And frankly, if there's a little bit more cash needing to be spent to achieve that, we want to be able to demonstrate to the SEPA and indeed to the outside world that we're on that case. And if I may just, whilst I have a red light, allow me to speak, just come back on Richard Leonard's point about the fees and things. The board knows additional fees are going to be charged. And in terms of seeing that coming through in the budget, because obviously every board meeting we get the budget and it's quizzed, but the board is becoming very hawkish on not charging, because the flip side of that is that we become the sponge which actually absorbs the additional cost. And that we're not prepared to do, because whatever we do, we need to spend the money to do the audit. And if people are not ready for us, if there's additional work, then we're not absorbing it. And that's a standpoint that the board has increasingly taken. And we think that's only fair in the audited bodies, because at the end of the day, if they're not ready or can't produce the stuff, then they should be the ones who are getting themselves organised. We accept that when it's our problem for not being there, we do absorb that cost. But when somebody else is the issue, then we will pass the cost on.
Richard, you're welcome to come back in if you want on that, but I think it's an interesting area, because I was very much under the impression that presumably you have fixed rates with these external organisations in quite, if I recall, quite long-term contracts, or reasonably lengthy contracts, so that it really, this number also surprised me in terms of the sheer level of rise in external fees. you're nearly £1.7 million over and above what was budgeted. So I presume that are you saying that's been driven not by understaffing issues in your organisation, but by the clients that you manage?
Yeah, to say it isn't staffing issues within, or issues within Audit Scotland, staffing ones, would not be 100% correct. But to think that it's an interaction. We have a plan, and the flip side of that is that the audited bodies all have to have a plan. And if that merges and meshes perfectly, then there would, in an ideal world, be no additional charge. But if we're hit by somebody not being ready for the audit at the time that they've been told it will happen, then inevitably you see slippage, and then you've got people to redeploy, or you've got gaps in so the costs inevitably go up in terms of where you're going. That's not what we want to do. It's not what the board wants to happen. But equally, you would not enjoy the situation where we didn't charge and we were producing a deficit, and you're saying, why have you got this deficit? That's the flip side of what we're doing. And we cannot make really a loss or a deficit, which is why the board equally is very hot in making sure that cumulatively, as best as we can manage this, because if we knew the budget, if the budget was going to be the accounts, we could actually present this year's figures last year when we're doing the budget. But a budget is just that. We know there's going to be flex. And what we're underpaid as a board to do is make sure that we don't have to come back to you for additional monies, knowing that there's going to be some things which are over, some things which are under.
I mean, it was a 20% jump in what was budgeted versus what was spent on external organisations. So it's not within the margin of small errors. It's a huge variance. But there's one thing missing from this table that perhaps maybe other members would comment on, and it's going back actually to the IT issues. We've had very long conversations about your big plans for upgrades and investments. I struggled to find that in the budget spend for last year. Is it because you haven't spent it and this is coming down the line and we're going to be hit by a big ask next year? Or it is in there, but it's because I've heard about laptops and cybersecurity, and by the way, I'm all for spending money on cybersecurity, and I'm sure the laptops are lovely, but I was expecting to see some lines on some major software infrastructure IT upgrades that would propel you into the future, as we talked about in previous meetings.
Yeah, so Vicky can give you the detail on this, Mr. Green. The short answer is it's coming. We are we're progressing well with the audit modernisation project. We've spoken to the Commission, and as I mentioned, very grateful for your interest and support on what's our key transformation project. So we've had successful engagement with the National Audit Office in terms of the anticipated adoption of that technology. So the answer is it's coming. I think, as ever, these are important processes that we get right. That it's not just about a piece of IT, it's also going to be about equipping our colleagues with a modified way of auditing. And we're also just learning and engaging with the National Audit Office so we get all the sequencing of that done properly. And that's something will be it is a significant feature of the 25-26, and then with some further recorded investment in 26-27. I think it's the high-level story of why it's not in the level of expenditure in the 24-25 accounts that we might have anticipated, but Vicky can say more, I'm sure.
Thank you. That's exactly it. When we brought you in December our 25-26 budget, there was quite a significant ask around the audit modernisation, which would translate into actually the procurement of the system as part of that budget approach. We said the internal staff costs we would try and absorb through efficiencies, and there was a number of areas we highlighted where the efficiencies were being absorbed. So you will absolutely see that coming through, because of the lag time in the 25-26 accounts. That's where we are at the moment. The business case for the audit modernisation final sign-off is in November this year. So that's when we'll have to actually start handing out or paying over the cash. What is in this year's budget, which Stuart highlighted, was some project management costs relating to audit modernisation, which are contingency for the in 24-25 we did use. But this is a huge investment area, an important investment area, and one of the particular things is moving the audit approach onto be the cloud-based approach, which will make things much more secure for us. Just as a bit of reassurance on the cyber security, as part of our training, as the Auditor General highlighted out, and what we hold on files, we are very clear that there's some sensitive data that we do not need that could relate to personal information. We don't need that as part of the audit, so we're very clear with staff to be quite rigorous around protected data that we hold.
Thank you. I'm sure there's plenty of people would argue about the security of having data in the cloud versus in hard drives in your own office, but that's maybe a discussion for another day. Thank you, Chair.
Thank you, Jimmy. I've got a few questions myself, but maybe I would ask members if they've got any follow-on questions. Yes, Mark.
Yeah, I suppose I'm still struggling to understand where that, big transformative IT project actually is, like right now. And again, following Jamie's question, I'm still struggling to see exactly where that spend is in terms of that work with procurement. It feels like it's within, the role of existing staff members as part of their everyday work to have delivered that. But, Stephen, you said about that it's coming, yeah. It's coming. But I'm struggling to see how much of it has actually been delivered already, what phase we're at, and where it sits within the budget that was presented for last year's spend.
Vicky might want to say it a bit more. I think so. It does feel we're right in the cusp of this project at the moment, Mr. Ruskell. We've invested in project management, project governance, engagement with potential providers. I think in terms of project governance, we are, I'm right in saying, Vicky, between outline and final business case. So final business case will come shortly into the autumn. And that's really, have we satisfied ourselves that this is the right step? And then very shortly thereafter, I think we'll start to see the spend, the support that we've had from the SCPA. But we're talking about really a further 2 years thereafter of, and of course it's not just about the IT system and investment, as you rightly point out, it's also about the associated learning and development that we need to provide our colleagues to apply the system to best effect. And that's going to be potentially the hardest bit of the project, because as we go through an adoption of technology or artificial intelligence in a ramped up way, that we need to make sure that we're equipping colleagues with the skills, the opportunity to ask the right questions and challenge, and that we are ready to apply and of course reap the benefits of this investment over the course of the next 4 to 5 years. So I think that's a kind of helpful synopsis. So we're working really hard, proactively, so that we get the conditions right. As I've said to the SCPA before, we don't want to be an example of a public body not getting it right on IT investment. We are going through the right in terms of project governance around it, the governance with the Audit Scotland Board on the investment, and just following that process and steps. We hope that we're going to be in a position where we engage with a reliable system and that's working well in other organisations, and that seems to be the path that we're following. So I would describe it, we're cautiously optimistic at this stage.
And just to add, for seeing some of the costs coming through, Stuart will have the exact figure, but in our professional and legal costs, we have had the costs of 2 gateway reviews that have been undertaken to provide that governance assurance and project management assurance that we are looking at the right things. So that has flowed through the 24-25 budget. There as we've highlighted, we're doing a shared service with the National Audit Office. That is in procurement and legals at the moment. So whilst we don't want to ramp up lots of legal costs, you would see that coming through it's in the 25-26 budget, and you would see that coming through in the 25-26 accounts. But the gateway review costs have been part. The costs predominantly up until this final procurement stage have been staff time. Our innovation and quality business group, a large part of their time is on this development and working with the National Audit Office of getting us to that contract ready position, which is planned for November.
That's really useful.
Yeah, Mr. Russell, I could just add something to this whole debate. The board is as interested as you are in making sure the money is spent as quickly as possible. That's not in any way to detract from the caution that's required to make sure this is right. But we're, if anything, trying to get it to go faster. I mean, we're probably being on the backs of the team providing it to say, why can't this go faster? Because we, as a board, appreciate the significance and the need to do this, because in some ways we're using 10-year-old technology and we're trying to get to the point where we get a forward look in terms of what we can do. And that goes from National Audit Office has been mentioned, but you know, the board has met with the board to ensure that everybody is aligned with this, and from the top to the bottom that is the case. So the board is pushing to make sure that you will see the figures coming through as quickly as possible.
Thank you. As I said, I've got one or two clarifications myself. We talked about travel and subsistence, and in the past we've used that as an indicator for remote working in terms of the audit itself. Now, there is a small increase here over last year, but substantially it still remains at a low figure. Does that mean there is, and maybe you can give an indication of the sort of percentage of audits that are now being done remotely? Has that become embedded within your processes? And what are the risks?
So we do not mandate that any audit should be done remotely or it should be entirely in person. I think it's important that there is the right engagement and judgment that's reflected between the discussion between the audited body and the auditor. It's our expectation, Chair, that auditors will be having face-to-face or on-site presence when they need to. And most typically that will be engagement with the senior team of public bodies, with their boards, council, audit committees, getting access to evidence, doing physical verifications when they need to. I could go on about the kind of range of tasks that are done in person relative to remotely. What probably I don't have is to give you a reliable percentage about the ratio between off-site and on-site. Some audits lend themselves to having more of an on-site presence than others. Particularly mentioned about some that Stuart's referred to about the complexity of some of the valuations and the lease assets. Auditors will have an on-site presence for that. And I think that's really going back to why there is variability in some of our travel and subsistence costs. So I think we are nudging towards having a stable and predictable figure for travel and subsistence. But I wouldn't say that to you that's a driver for how we are requiring teams to deliver audit work. They have the autonomy to decide how best to deliver audit work so that it meets our expectations on delivery performance, quality, and also that public bodies are getting the right experience and benefit from having their audits undertaken either by firms that we appoint or by an Audit Scotland team.
So the decision as to whether to do the audit remotely or not is with the team.
That's a share. I would say it's a shared discussion between the audit team and the audited body. So the audit team, won't unilaterally decide. And I should be frank with the Commission that there are some public bodies that want an on-site audit, and there are some that want and are geared up to delivering a remote audit. You'll see variable arrangements across Scotland. I think I should also point out, Chair, that the Commission today will consider Audit Scotland's annual report and accounts. We've had a remote audit undertaken by Alexander Sloan, and we've had a positive experience of that and a successful one too. So I wouldn't want to paint a picture that says one model or the other has to be delivered for an audit to be successful. But what I would maybe offer is that it matters that there is on-site and face-to-face engagement. I think it's important for auditors to know it's incumbent upon us to know the business, and some of that is done in complex circumstances on a face-to-face basis.
But surely this makes it quite difficult to budget. If ad hoc decisions are being taken by the audit teams, then how do you get any sort of accuracy in your budgeting?
I wouldn't say it's universal. It's certainly not across all aspects of our budget. So the most significant lines in our budget are staff costs. So we're not changing our staffing mix, whether it's going to be on or off-site auditing. I think we'd say it's probably some of our more marginal costs that you'll see variability. We're not an organisation that's going to mandate or micromanage how an audit has been done. These are relationships. I appoint the auditors, whether it's the audited of a firm or an in-house team. We need to give some audit teams discretion. They can adjust and flex their audit approach and the resultant judgments and reports that they make for the circumstances of the audited body in front of them.
Just on page 29 of the report, it says that most savings come from staff costs, travel and subsistence. So presumably the vacancy level management is one thing, but there's an anticipation that travel and subsistence will also provide savings.
Not indefinitely. Not indefinitely in terms of savings on travel and subsistence. I think as we've touched on this morning, that we hope we're getting to a more stable and predictable travel and subsistence budget. By far more significance is where you started, Chair, is the vacancy management factor that we are applying through our budget, as we've talked about with the Commission and our budget proposal specifically. That's a risk to the delivery of the budget. We're tracking that really carefully through the recruitment board and through monthly reporting. We have a target of 5%, and we're currently, as we're coming towards the end of June, we're at 3.7%. So they've got a bit of a way to go just to make sure that that level of savings is delivered and we can meet our budget requirements. But as we hopefully to reassure you and the other members of the Commission, we're closely monitoring this.
Is there going to be a change to the profile of efficiency savings, given what you say, and the savings here of 1.5 million came from staff costs, travel and subsistence? If what you're saying is correct, then going forward it's going to become more challenging because you're going to have to look at other areas.
Yeah, I agree. I think that's fair. I think the context we've spoken about this morning of how audits are being delivered, a number of different audit years all being delivered at once, and then the adoption of new auditing accounting standards together with our own investment in IT, so this is the macro context of how will affect our savings performance. Our organisation is going to change. I think when you look at the investment that we are making in technology, the application of artificial intelligence or audit automation means that we're looking really carefully through our people strategy to what our target operating model will be in the future. So I can assure you that it will look different, and the profile of our savings will be different in years to come. So when we present our budget proposal to the Commission in December, and then certainly 12 months thereafter, I think you'll see a different look and feel to Audit Scotland, that we are ready for the future and the challenges that we are here to absorb and to deliver. But I'm not on that line of where our savings have been to date. I think there's probably less evidence that we can say that's a reliable trend for what might come in the future. I think it's going to change.
Okay, can I ask you just a daft question? On page 21, you talk about the changes in the physical workplaces, reducing Edinburgh, making more space in Glasgow, and that's going to deliver 2.2 million in savings. Why not Paisley instead of Glasgow, or Livingston, where it would be even cheaper?
It's a balance. Over the years, Audit Scotland has had a bigger footprint. We at one point had our west-based office was in East Kilbride rather than Glasgow. And I think what we find is that we are better able to travel productively to recruit and retain people where we have a presence in larger cities. And that has kind of, I think particularly with Glasgow Chair, has proven to be the case that we are able to recruit and retain, and especially as, you know, as the Chair alluded to earlier, we're large training providers. So as our accounts set out, we have over 50 trainees at any one point. The survey and engagement and feedback that we have from our trainees and prospective hires is that having a footprint in Glasgow and Edinburgh makes it a more attractive position or an organisation to join. And I should say, we're in competition all the time with either other public bodies or firms or even just commercial organisations to recruit and retain talent. So whilst I'm sympathetic to the question you make, you're right. You know, we would have a lower estate cost provision if we positioned ourselves outside of the two largest population centres. But I think we find that the benefits of doing so allow us to recruit and retain people that perhaps don't want to, if I'm being absolutely frank, you know, either are unable or don't want to base themselves in different locations.
And just continuing on some of that trend, I noticed that Audit Scotland is a relatively small body, but it has 5 officers who are paid in excess of £100,000, the magic figure that people look at these days. Is that disproportionate?
So again, I think this is a question for the board. I think Colin will have a perspective on this. You'll know that my terms and conditions are set by the Scottish Parliament. I know you're referring to the other members of the executive team. Audit Scotland board is responsible for the recruitment and the terms and conditions of the other members of the executive team. I think our view has been, Chair, that we've kind of looked at this carefully, about reference points to other terms and conditions of senior people in other parts of public sector in Scotland and elsewhere in the UK, and came to a view that these were commensurate with market rates. But I'm sure kind of Colin will want to reassure the Commission that of the governance that we have around these.
Thanks, Stephen. I think the key point here, Chair, is that if you look at the 5 people who are all paid more than the figure you mentioned, they're all professionally qualified, they're all at the top of their game, they're all in positions of significant seniority doing audits. And if you compare that to the private sector at a similar level, we believe we're comparable with the private sector, and that's our biggest pool. Both were going either which way. So we are very confident that we've got very well qualified people doing very important jobs and that they are paid appropriately.
Okay. Just looking at page 49, and it's hard to tell from this how far this affects the 5 top payers, but I see that in 2023-24 there was an 8% increase in what people were paid, or the highest paid individual, and 6% this past year. However, staff this year got 2.5. Was there some element of salary compression in there that had to be adjusted, or?
No, I'm happy to explain that, Chair. Actually, I think if we refer over the page on page 50 to the pay settlement, so all colleagues in 24-25 were awarded a 4.2% pay award, but goes on to say that the movement from 23-24 of the average percentage change reflects really our change in makeup So we have recruited more people at lower grades in the organisation. So that is slightly skewing why the percentage change is different. So we're bringing in more trainees, more modern apprentices and school leavers into the organisation. So that's affecting the ratio disclosed in the table.
Okay, still looking at staff, looking at page 51, the turnover rate for staff has continued to increase year on year from 9.02 in 22-23 to 9.33 in 23-24 to 10.09 in 24-25. What's the reasons behind that?
Vicky might want to kind of set that out. I think there are many and some of them are complicated. I think Vicky, as I say, can get into that, Chair. I think for me, I think we're broadly in a stable position now. I think this is going to be a more consistent, longer-term trend. The Audit Scotland historically, I think, as with many parts of the public sector, have people who have given their entire careers to the organisation, and there are others that will come and join us, you know, especially within our trainees, so you know, do their training programme with us, and then, as is in some cases our expectation, will go on to have successful careers contributing to public bodies across Scotland or in a commercial setting. But I think that ratio is changing. So I think the expectation of people having a career with one organisation, like Audit Scotland for many years, for some that will absolutely be the case, and of course we welcome that. But for others, I think you're just seeing perhaps a skewing towards being with us, contributing successfully for a number of years, and then going on to do different things. But Vicky can say some of the factors driving that.
Thank you. So yes, it's increased over the last couple of years, and as a result of that trend, this is something that we're carefully looking at. But when we've discussed it at executive team and also our remuneration committee, turnover is quite healthy for our organisation. We do want to have a healthy level of turnover, and particularly as that training provider, bringing in, as Auditor General highlighted, graduates, school leavers. We're doing more modern apprentices, which are for fixed term 2 years. Where we've got that turnover, we see that as quite healthy. There has also been at the other end some retireals within the organisation. So what we're planning and doing at the moment with our workforce planning and our target operating model is going into that increased level of granularity. Where is it healthy at each of the points at the different skill sets, whether it's at senior auditor, whether it's at director, whether it's at trainee level, and what is our aspirational turnover to make sure that we've got that healthy organisation. So we're not concerned about where our turnover is at the moment. What we just need to ensure is the turnover at the right points, and that's the work we're doing now. Particularly, I think, in terms of training and looking at the skills as more AI comes in. We're saying to staff that AI is not necessarily going to replace jobs, but people will need to be AI ready as part of their jobs. So the target operating model is looking at skills, use of artificial intelligence, and what our workforce plan is at each level.
If you're looking at managing your recurring costs by the vacancy levels, how does that equate with the substantial increase in the cost of temporary staff? That seems like you're saving on the one hand and paying out the other.
So I think we're not going to change away from the recruitment board arrangements and managing the vacancy factor. That feels like an appropriate step for us, demonstrating our efficiency, taking stock in this period of change as an organisation. The temporary staff have always been a feature to varying degrees of how we've delivered our work. We have particular peaks in how we deliver audit work. So almost all public bodies have a 31st of March financial year end. And then we, to an extent, stagger the audit reporting timescales with, as you know, with NHS audits coming by the end of June, councils by September, October time, and really only further education colleges that are outside of that cycle. So squeezing all of that into the midsummer and autumn months has at times said, well, we'll bring in some temporary staff. What you're also seeing in some of those numbers, Chair, is that we've, for some of the project management skills, that we brought into the organisation for both the delivery of a couple of our key projects, one on the audit modernisation software project, and also with the, the implementation of our resource deployment system, that we've brought in some project management skills that we don't need to have routinely day in, day out, but actually for particular kind of projects we can source them, and hopefully successful delivery we don't need them to continue thereafter.
Yeah, just one last question. In page 91, you talk about, under other provisions here, we're talking about a provision raised back in 21-22 as a legal obligation to rebate audit fees for an element of your pooled cost charges. Can you just remind me, you say the obligation is released in 24-25. What was that again?
I'll pass to Stuart, actually, so I don't misspeak. Actually, I can set that detail out.
Yeah, when this was during the pandemic, where we had budgets and we were budgeting on travel and subsistence at the firms, and we were doing at that time. So pool costs are included in there and distributed across all bodies in the public sector. So what was happening, because everyone was working from home at that time, we had budgets and we'd set fees that were included in that, and we'd invoiced that out. But what had then happened is, because we'd incurred no costs whatsoever, we put in a provision to rebate all the public bodies the fees that we had charged for travel and assistance over a 2-year period, and that was the phase-in, and that's now completely repaid back to the public bodies that paid fees that we didn't incur the cost for.
Okay, thank you. Can I ask if members have any other questions they would like to ask? No? In that case, I would like to thank Colin Crosby, the Auditor General, Vicky and Stuart for their evidence this morning. There will be a short suspension for a changeover of witnesses. Oh, yes. Sorry, I'm just being reminded that I should just say that we'll probably have a few follow-up questions to write to you about in due course. So I'll suspend the meeting to allow a changeover of witnesses. We'll maybe take a 5-minute break at this point and carry on in 5 minutes' time. Thank you. Well, welcome back. And I'd like to open by welcoming to the meeting David Jeffcoat, Partner, and Gillian So, Audit and Accounts Manager, both from Alexander Sloan. I don't know if either of you want to make any comments at the beginning. David?
Yeah, if I could make an opening statement. Good morning, Chair and the Commission. I'd like to give a summary of our work to accompany our audit opinion and our audit summary report. Alexander Sloan was appointed to carry out the external audit of the financial statements of Audit Scotland for the year to 31st of March 2025. Our audit work commenced with the planning and interim work in February. Our main audit field work started in early May and signed the audit report on 9th of June 2025. Our audit was carried out in accordance with international standards on auditing. Our audit opinion is contained within the audit report. In the accounts, it confirms that the financial statements of Audit Scotland give a true and fair view, as at 31st of March, that they have been properly prepared in accordance with international financial reporting standards and the Government's Financial Reporting Manual, and in accordance with the Public Finance and Accountability Act 2000. Our opinion also covers the sections of the remuneration report and confirms these have been properly prepared. For the record, I can confirm that adequate accounting records have been kept by Audit Scotland and that we've received all the information and explanations we required before issuing the audit opinion. Our audit opinion also confirms that expenditure has been incurred and receipts applied in accordance with the PFA Act 2000. As part of our audit work, we have prepared an audit summary report for the management of Audit Scotland, and a copy of this has been sent to the Commission. The audit summary report notes our responses to key audit areas and, where applicable, reports on any weaknesses in the accounting systems and internal controls that may come to our attention. If I could summarise our response to key audit areas, our audit work on management override considered the authorisation, appropriateness and accuracy of bookkeeping and accounting journals and related financial controls, and we identified no issues to bring to the attention of the Commission. Our audit work on revenue recognition considered the accuracy of recording income in the appropriate accounting period and is linked to our work on work in progress. Our audit work here identified two adjustments relating to work in progress balances in respect of additional audit fees. These proposed amendments were agreed with Audit Scotland management and the accounts updated, and we are satisfied that fee income has been accounted for appropriately and that the work in progress debtor and creditor balance at 31st of March 2025 is accurately calculated. Our audit work also considered two key areas arising from the past couple of years, namely lease accounting and pension accounting. Our review of the relevant balances and treatment of lease accounting identified no issues, and we are satisfied this has been accounted for appropriately within the accounts, and the disclosures are sufficient. Our review of the accounting for pensions on the statement of financial position and the notes to the accounts also identified no issues, and we are satisfied the treatment of the nil balance is consistent with previous years and consistent with the actuaries' reports, and that all disclosures have been noted appropriately in the financial statements. One other key area following on from last year's audit was in respect of the disclosure in the remuneration report of the value of accrued pension benefits. Last year, an explanation within the report was required to explain an omission. We were satisfied that this was permissible following an exceptional revision to the FREM accounting rules last year, but we were aware that no such revision would be made available in 2025. This year, the pension information required for disclosure was received from the Civil Service Pension Scheme on time, reviewed and checked, and we are satisfied that the disclosures in the remuneration report this year is accurate, appropriate and consistent with the FREM. Our audit summary report is also an opportunity to propose recommendations to internal controls, and I can confirm there's no matters were identified we required to raise to the management or commission. Finally, on behalf of me and my audit team, I would like to record our thanks and appreciation to the staff at Audit Scotland for their continued helpful and prompt cooperation during the audit. I'm happy to take any questions from members of the Commission. Thank you.
Thank you. There's just one or two fairly formal questions. You touched on this already, but for completeness and for the official record, can you confirm you've received all the necessary information and explanations that you require to form your opinion on the financial statements?
Yes, I can confirm that, yes.
On page 8 of your audit report, you set out adjustments identified by the audit and process in the financial statements. One of the entries is for £180,000 and has an impact on Audit Scotland's expenditure. Can you explain the basis of that adjustment and how it was identified?
Yeah, so part of our review of work in progress is to consider the spreadsheets that underlie those the figures in the accounts. On review, there were a couple of omitted entries within, I think, 22-23 audit year, and when added and looked into, added up to, I think, £170,000 that were not included in that spreadsheet. But again, it's fairly sort of standard audit work and assessment that was identified in.
Okay. Accounting judgments require detailed consideration and scrutiny by auditors. Can you confirm you're content with the judgments made by Audit Scotland and the disclosure of those in the annual report and accounts?
Yes, I can confirm that.
I believe you did a remote audit.
We did, yes.
Is that the first one?
No, so we've done a remote audit since 2020. We have attended audit committees. So again, I think as the Auditor General was saying, there's certain things like attendance at audit committees are a useful addition to what wasn't, permissible 3 or 4 years ago, perhaps. And again, I think as the Auditor General was saying about how the audits are conducted, we also adopt that approach of considering what's best for that audit itself. So is it either a mostly fully remote audit, or is it mostly a sort of on-site audit, or is it a bit in between? For us, what's really important is actually availability of staff as well, and ability to actually access records. So if the records are available electronically, then obviously that's more in favour of being able to do it remotely. If the staff at the audited body is available, and again, Audit Scotland have been very, very good at that in terms of being available at really any time during that audit period. And also that also allows itself to, or lends itself to for an audit to be remote as well.
Thank you. Can I ask if any of the members have any questions? No? In that case, I'd like to thank David and Gillian for being here today. And we'll now have a short suspension for changeover of witnesses.
Thank you.
The final evidence session this morning is agenda item 2, which is on Audit Scotland's Quality of Public Audit in Scotland Annual Report 2024-25. So I'd like to welcome back Colin Crosbie, Chair of the Board of Audit Scotland, Stephen Boyle, Auditor General for Scotland, Vicky Bibby, Chief Operating Officer, and Owen Smith, Interim Audit Director, Audit Quality and Appointments. And I'll now open up the session to questions from members. Jimmy.
Thank you. If I recall in previous reports, under the quality of public audit, there was more information provided around some of the audit inputs from your auditors. So that included both internal auditors and your external audit partners. And some useful information when they were surveyed around their opinions on, for example, whether they felt that they were able to carry out high-quality audit, whether they were had all the resources that were necessary to be able to allow them to do their job, and were given the time, training, and development appropriate to do so. It was quite helpful information. It's not been included in this year's report. Why not?
Good morning. There are two reports, if I can say, Mr. Green. One is the report you have before you today, which is the quality of public audit in Scotland. And that is a summation of the totality of how well audit work has been delivered to the requirements set by Audit Scotland's quality framework, and applies to Audit Scotland's teams and also the firms that we appoint. We do have the detail actually on some of that you're asking for, so I'll bring in colleagues in a moment who can talk you through some of that. But perhaps it's also worth setting out, as I mentioned, this is a summation. Underlying it, all of the auditors that we, the Accounts Commission I appoint, also produce what's known as a transparency report, which sets out how well they have done, how well they're performing against both the external quality assessment of their work, any quality assessment that's been done by an in-house quality assurance team, and then also the point that you're asking about is what are the views, what are the experiences of people when they're delivering audit work. I can pass to Vicky actually, and maybe Owen might want to come in as well, just to give you some of that detail over and above what you have in the paper before you. Vicky.
Yes, thank you. The Aqua team, Owen's team, independently with then approval from the Auditor General and the Accounts Commission, set up the framework for the audit quality standards. And in section 5 of the report, we do have the audit quality survey based on what is asked. So there has been changes this year to what that framework is that was agreed by Auditor General and the Accounts Commission, and that's what the team went out and asked for, particularly then in relation to the stakeholder perceptions at section 5. But I'll pass over to Owen to give more detail on that aspect.
Thank you, Vicky. Good morning. We revised the audit quality framework last year with the permission of the approval of the Auditor General and Accounts Commission, and we previously included staff surveys from all the appointed auditors. And the reality was it was never that easy to gather information because it's done differently by different appointed auditors or audit firms. And this transparency reports, as the Auditor General mentioned, all include their responsibility to ensure their staff are adequately trained, got enough resources, and that's because the International Standard on Quality Management came in, which we do have an audit quality indicator on to ensure compliance. So it was two things. Basically, we couldn't get as consistent information across all the appointed auditors, and they were doing it anyway to comply with International Standard on Quality Management and reporting their results through their transparency reports. So we tried to streamline the Quality of Public Audit in Scotland report and allow the transparency reports to be the place where the appointed firms discuss what they're doing to ensure their staff are appropriately trained and have enough resources.
So just to clarify, so does that mean that you're no longer surveying the auditors and external firms, you're relying on those firms surveying their own staff?
We never surveyed the firms
right.
for this question. That was relying on their already existing procedures they had to meet with audit standards to see if their staff are actually properly trained or how they're perceived they're appropriately trained, got enough resources, etc. But the actual really important change for us was the bringing in of the International Standard on Quality Management, which is a change about 2-3 years ago. And we do have an audit quality indicator to ensure compliance with that, and we ask ICAW to ensure that the arrangements when they review audit files are in line with what they expect to meet this standard. And that standard is all about the quality arrangements to ensure that the audits are going to be delivered to standard, and it includes things like resourcing, etc. But we removed it from the Quality of Public Audit in Scotland report because there was inconsistencies in terms of what data we're getting back, so it wasn't really able to be trended. But it is reported in the transparency reports for Audit Scotland and the 6 firms.
So where would I find information on internal Audit Scotland staff? What sort of level of surveys is being done there? How useful or reliable is that data in terms of their happiness or contentness with what they're being given to allow them to do their jobs?
Vicky, do you want to tell?
Yes, thank you. So from the, as Owen said, there's elements of that in the transparency, but separate to that, we do quite robust staff surveys, and very pleased to report that as part of the Best Companies survey, which we've been doing for over a decade, we have reached a one-star employer, which we hadn't been other than in the years of the pandemic. So that's really, really good results for us. It looks at how you feel as part of the organisation, as part of the team. Are you appropriately trained to do your job? So we got the results of those in March, and that we can get the level of data high level but broken down into each team, so we take that detail quite seriously. We also do health and wellbeing surveys, and the next one of that will be in September.
Thank you very much. And just as a side question to that, have you as an organisation been, we talked about earlier in a previous session, particularly around some of the costs involved, but in trying to bring people back together, I know it's been a bit of a tough slog for many public organisations in getting people back into the office. Is there a direction of travel on that? Has it stabilised? Are you still trying to encourage people to come, particularly your auditors, to work face-to-face more? And has there been any resistance to that?
Thank you. There's a real drive around the benefit of people being together, but we have purposely taken a balanced approach because it equally is an attractive way to encourage people to work with us is having that hybrid approach. But we're very clear that hybrid is not home working. Hybrid is the definition of a mix of home working and being in the office. And as I highlighted earlier, it's not unique, but thinking about us as a training provider, whilst we can do online some of the more technical training, actually that on-site training, that relationships, that curiosity that you need as an auditor, it's absolutely vital that you get that training face-to-face. And actually, we can corroborate that our ICAS results for our training are really, really strong, and they have improved year on year the more and more that we are face-to-face. It's a balance because bringing, whilst relatively small, but 350 staff, bringing everybody together, there is a cost. But what we did is had a financial audit training session. We worked with a public sector host to bring our financial auditors together and had training on some new standards, particularly tricky areas like asset valuation, but also showing them what our new audit modernisation project would be like that. And we had a staff survey on that, and that was hugely valuable. So we're trying to take a balanced approach. I know many organisations are going down to mandating the 3 days a week. We're not there. We don't feel we need to be there. We've got a balance, and we've been putting extra work into manager training around the expectations, and we've got of face-to-face meetings, and we've got introduced this year a new performance management framework that sets out the relationship between the manager and the individual and the expectation of that level of interaction. So we're taking that approach of providing clarity around expectations without that sort of top-down draconian, you must be in 3 days or 4 days a week.
I mean, there's a debate as to why not. I mean, you know, I guess it's a competitive working environment, and there are other companies may offer different working practices that are more favourable to people, so you've got to stay competitive, I guess. That's fine. I'm happy to leave it there. I'll maybe see if I have any other questions on some of the more audit quality questions later, after other members have gone.
Right. Richard Leonard to come in.
Yeah, thank you very much. Can I ask a couple of questions around audit delays? So when we look at paragraph 20 in this report, which tells us that there are 91 audits which are delayed. Well, in fact, when I read it in a bit more detail, what it tells me is there are 91 audits that are late and not making progress. So they're not just delayed, they're stuck, it seems to me. So I wonder if you could address that, but can you also address this? And I know this is probably an unfair way of framing it, but if I could be simple in my approach, if there are 91 delayed audits, at the start of this report, you talk about between 233 and 253 audits being completed. That's a ratio of between 35 and almost 40% of audits that are delayed or late and not making progress. That's a huge proportion, isn't it?
It's absolutely higher than we want it to be in terms of the number of audits. And it's not, an audit doesn't sit in isolation. This is an audit of a set of an annual report and accounts of a public body. So we're talking about the public body being able to lay its audited annual report and accounts either in Parliament or to meet a deadline set by the government or the Scottish or the Accounts Commission. So that and of course it matters because timeliness of delivery is a feature of the accounts, their usefulness and the quality of the audit. So we absolutely recognise, just to reassure the Commission, that we are looking at this matter. It's broadly consistent with what we knew was going to be a phased recovery period. In terms of some of the statistics, if it's helpful, just to set it in context what we think we're talking about. In the 24-25 year, 91% of all of the NHS audits were delivered by the deadline of the end of June. So within that 3-month window of the end of the financial year to the end of June, that's an increase from 74% the previous year. Further education, 70%, up from 67%. Central government, 60%, as was the same the previous year. And local government increased from 29%, a really low number of percentage delivered, up to 42%. Of those, so first of all, an audit can be late, but then also matters how late were the audits. In some cases, we're talking about a few days or a few weeks. Still late, still matters, but 90% or so were delivered by the end of the calendar year. And then what we have, I think, just by way of context, is we do have a few audits, and I think as we talked about in the earlier session, we are still auditing in some cases over a 3-year period, some going back to 22-23. We have a few additional in 23-24, with the majority now on 24-25. I think I have confidence, Mr Leonard, that we are progressing in terms of the phased recovery period, given the hugely disruptive effect that COVID caused to the delivery of audit work, and that we're on the right path. I can bring Owen in and say a bit of detail of any specifics and what it means for an audit being late, if anything you'd find helpful. But you're right, we're not yet where we want to be, but I'm seeing signs of progress.
But before you do that, could you expand not just on late? I think we all understand late, and that there may be, understandable reasons for lateness in the completion of an audit. But what about the expression "not making progress"? I mean, that's of much greater concern to me than audits being late.
You're right. Some of the wording is quite specific on what that actually means, so I can pass it on to say what set that out.
So we brought in making progress to try and show inertia and movement to improvement. So that actually means a month better than the year before they were signed off. So that if an audit is a month ahead of where it was last year, it's making progress. There are many reasons why they might look like they're stuck and not making progress, but that could be called because they're prioritising the ones that were on target and making sure they don't become jeopardised. So, for instance, in the year ahead, I know that 2 firms plan on delivering all their audits on time, and one of the firms last year had 7 that were late, but they're only expecting 2 this year because they've prioritised their staffing and resources in partnership with the audit body to make sure they can bring that audit back on time. Because there's no point in the auditor turning up saying, "I'm here to do audit," and the body's not ready. So it's about that partnership, getting them aligned together. It might take a couple of years for some of these audits, but it's not jeopardising the ones that are already on time, and it's making sure the ones that need to catch up can do so at the right point in time. And they will hopefully be making progress in 24-25.
But these are not health and safety inspectors that turn up unannounced, are they? I mean, I would expect that an audit is a planned operation between the public body which is being audited and the either internal or external firm that's carrying out the audit.
You're quite right. This is a partnership between the auditor and the audited body to deliver the audit. And there is no merit in an auditor turning up to, a deadline that's been set by the Accounts Commission or me or the Parliament if the public body's not ready to support the delivery of the audit. I think maybe just on the language, not making progress doesn't necessarily mean that audit work isn't happening. I think audit work can still be, and it will, in many cases, it's happening, but it's not yet accelerating the recovery to the deadline, from where we want that audit to be. So I think across the piece, forgive me for repeating myself, I think that there are concerns in terms of some of the timeline for delivery, but at the same time, we're also seeing progress, especially from last year. The key focus, I think, what we're seeing from Owen and Vicky's support and engagement with both auditors and audited bodies is where there are a handful of audits of public bodies that aren't making the progress that we want them to be. And that's the real focus where there's that level of concern that, and we are very keen to avoid this for good reason, is that we're not straddling more than 1 5-year audit appointment cycle. There's considerable effort being made to recover the deadlines for all audits as we come to an exit of this current cycle in 2 years' time.
Yeah, and I think you refer in the report in paragraph 18 to one outlier public body that hasn't had its audit completed from the year 2022 to 23, and therefore not had an audit completed financial year 23-24, and therefore not had an audit completed financial year 24-25. I mean, again, that rings alarm bells with me as the convener of the Public Audit Committee, as well as being a member of this commission. I mean, because this is about, in the end, public money. It's about assurance for that body and the good governance of that body. But it's also the fact that, I mean, I don't know how big that organisation in particular is, but nonetheless, we're talking about whether there is a proper audit being undertaken of public money.
And I absolutely share your concern, as the Auditor General for the organisation I'm familiar with, is that, as I mentioned, timeliness of delivery and laying of accounts is a feature of quality, of assurance to the Parliament that the money that was voted for and allocated to this public body was spent in accordance with what those expectations were. There are some mitigating circumstances, Mr Leonard, in respect of this organisation, and one of those factors is, as the Auditor General, as I know you know well, as convener of the Public Audit Committee, is that I can choose to exercise an option to lay a statutory report on the audit of a public body's annual report and accounts, and that is one of the reasons why the audit has not yet completed or laid. What I can say to you is that all of the audit work has been completed, and in respect of this audit, we are going through clearance with the public body in respect of comments on the Section 22 report. However, in terms of the wider recovery issue, we've also seen evidence, I think as Owen alludes to, that the audit doesn't then stop for 12 months and then pick up again. What we're seeing is an acceleration and a compression of that recovery period, so that there's a quick process now of being undertaken of catch-up. So 23-24 is well underway, if not completed, and then 24-25 shortly thereafter. So we can see interventions and steps making a difference. But your overall point is absolutely fair, is that all of us want to see audit completed timely so that it's useful and relevant.
Okay, I mean, perhaps I can finish where I started, and that's going back to, again, these are your figures, that 91 audits are late, or in Mr Smith's terminology, not making progress according to his yardstick. But what you also do is give us a breakdown, and you say of that 91, 46 are due to the auditor, 27 are due to the body that's been audited, and 18 are beyond the control of either. Again, I'm not quite sure what beyond the control of either means. How can something be beyond the control of either the auditor or the public body that's been audited? That baffles me.
So I think all three of my colleagues want to come in, actually, and
Excellent.
And hopefully reassure you about some of these details. So I think maybe pass it to Owen, then Vicky, and then Colin.
Okay, thank you. Auditor General, the beyond the control was largely due to ones that were so late the year before that they could never have recovered in the year. So, you know, not good. But there is a handful that are needing to be, you know, looked at quite closely. It's 18 there, but it's actually, they're almost beyond the point where they can come back in the audit year in question. So we're now in the third year of the 5-year audit appointment, and this is where we do expect recovery to start taking place. We looked at the annual audit plans, so 80% of them are in on time, which again reflects the planning to deliver the audits on time. So there's lots of good progress in year 3. It is very difficult to define exactly why a reason an audit is late. That's how we picked the main reason. And the one I mentioned earlier on is about auditors prioritising audits that are already on time and not jeopardising those ones that need recovery, and working with the body to come back in the next year or 2 years to bring it back on time. So when it says it's the auditors primarily responsible, it's the fact they're not going to prioritise the delayed audit at risk of the other audits that are already on time. I don't know if you want to come in there, Mr Leonard.
Sorry, it just reminds me of the narrative we get around Ferguson Marine. that in order to get the Glen Sannox afloat, we have to jeopardise the progress on the Glen Rosa to retrofit parts from the Glen Rosa onto the Glen Sonic, so at least that's afloat. But that doesn't solve the problem of what's happening with the public body whose audit is being considerably delayed and jeopardised, does it? I mean, I understand that's the way of working. The reason I'm making facial expressions is because it just reminds me of what we get told in other aspects of audit.
I think what you have before you in today's report is a pragmatic phased recovery of audit delivery. So through engagement with the SCPA and the support that you've provided us to modernise our organisation, to support us during the early stages of the pandemic, I think leads us to where we are today to some extent. What we didn't look to do was to seek a significant injection of resource, even if it were available, which is debatable whether there's a pool of auditors waiting to come in to deliver public audit. Never mind whether, you know, as Owen sets out in the paper too, a public body might just not be ready to deliver the audit through their own capacity and expertise too. So there's something of a middle ground of a phased recovery that has been the approach that we agreed with the Audit Scotland Board, the Accounts Commission and I to get ourselves to a point by the end of this 5-year cycle that almost all the audits will be back on time and being delivered as expected. And I think broadly that's one that I think was the right call. It does allow for the fact that not all public bodies will have their audit delivered on time. And in some cases, I think what we've hoped to set out clearly today, that will be due to the capacity of the audit team or the audit provider who haven't been able to deliver that in the way that they would have done before the pandemic. So for me, I think we're in a place of recovery rather than having a perfect solution at this stage.
Just to add to that, as I say, if we stick to the plan that we've got, we should be on track for the end of this contract term. We've been working, I've been working with the Auditor General, but also the Accounts Commission and the Controller of Audit, looking at local government and to monitor now which bodies are on track against the plan and to have early intervention where those ones might slip against any plan. And we've got quite a rigorous approach around that. We're also writing out to audited bodies to reinforce the importance and priority of producing a set of accounts. We are very clear that we don't want to find ourselves in a position, unfortunately, where things have got to down south of the border, and we've been working closely with MHCLG and what their approach is going to be with the local audit office. But we feel it's really, really important that we are highlighting and stressing the importance of public audit and producing audited accounts. The Accounts Commission is closely watching this as well, so I just wanted to highlight that on their behalf. Not that I speak for them, but they have been looking at this very closely for your reassurance.
Okay.
I'm delighted you've taken this line of questioning, because it's a similar question to the one that the board and the audit committee ask. And it's very fair. I'm not quite sure about the analogy to the Ferguson shipyard, but leaving that aside, within the, if you take 23-24 as being the March year end 24, and the number of audits delivered by the 31st, using your analogy, we have 233 boats which are floating and working and approved. We've got a balance which are still at the dock. And the real issue with that is, and I think really what the board is increasingly looking at is saying, look, you've got your critical path analysis of 253 audits, and when are they going to land? And all the lateness criteria is our internal critical path analysis, and quite rightly, everybody gets beaten up internally about the lateness. The board have got a slightly more holistic view in that and say, but are we doing the bulk of the work we say we're going to do in the year in which we should be doing it? And then increasingly saying, so the 8% which haven't been, what are the hiccups and hold-ups there? And are they legitimate, or are they our fault, or whatever? And to that extent, to have your critical path analysis up to the key critical, which you can't actually then put the resources to the right place at the right time. But because of pandemic and one or two other things, we don't live in a perfect world where that can be automatically put out. And that's why, in a way, the 233 out of the 253 is a more meaningful number, certainly to the board increasingly, providing we know what's happening to the ones which are behind and why. And can we get them brought forward? That's really what our line of questioning is. So it's a very valid and appreciated line of questioning from yourself. Because it's absolutely in the forefront of the board every time we see this.
Okay, thanks. I could continue, Colin, Chair, but I don't think time permits, so I'll pass back to you.
No, you're quite correct. Time is tight, and I would ask for questions and answers also to be tight. Mark Ruskell.
Yeah, thanks, Chair. So I wanted just to focus on the external quality review that was conducted by IQ. And, you know, I'm aware that they looked at 8 audits, 5 of which, good bill of health, 3 which were conducted by Audit Scotland's in-house teams were, let's say there were kind of some significant criticisms of those. So I suppose I'm interested in, without repeating all the findings of those reports, I'm interested to know kind of, what you thought the reasons were for that, and really on the back of that, what learning's taken place, what actions have you put in place to kind of weed out those audits which have been shown to be of a poor performance, and that was, bear in mind, that was only 8 that were looked at. So yeah.
No, thank you for the question. Actually, I think we have had a long-standing engagement with an external quality provider. We're now with Institute of Chartered Accountants of England and Wales, previously Institute of Chartered Accountants of Scotland, to give us that external assessment, validation or recommendations for improvement. It's integral to our audit quality framework. Importantly for me and the Accounts Commission, it covers not just our financial audit, but our performance audit and our public reporting too. So we have that assurance that when we're making judgments publicly through the Parliament, that they are reliable. And the same for our financial audit when they're giving assurance on whether public spending and the audit opinion is similarly reliable. Maybe first of all, if I may just address the totality. On performance audit and best value, we're very pleased. can see consistently strong results on our public reporting, on our Section 23 reports, our best value reporting. That's really the score. A score of 2 or 1 is very good. And I'm paraphrasing some of the language. The language is quite specific in this. On our financial audits, I think we're seeing a range of scores. We have, I think if you look at the exhibit on page 17, for example, on the Quality of Public Audit report, for the Audit Services Group of Audit Scotland, they've actually ticked every box. So we have scores of 1, 2, 3 and 4 for the financial audits. On the scores of 1 and 2, again, very satisfying that the Institute of Chartered Accountants of England and Wales have said that the audit team is really meeting the standards. And these are high standards, Mr. Ruskell. This is the same standards that the regulator ICAW will be holding all of the big 4, the top 10 firms for their audits of PLCs, charities and every other commercial organisation to account on. So that Audit Scotland is showing that it can meet these standards is quite right and satisfying. But the scores of 3 is not where you want to be, and there are improvements required on some of those audits. I should point out also that Audit Scotland audits a wide range of organisations. So from the Scottish Government, large local authorities and health boards, down to some very small bodies, some charities of local government as well. And some of those bodies, we also require them to meet the international auditing standards. So for every audit that doesn't meet the required standard, the audit team is required firstly to do a lessons learned or root cause analysis. What went wrong during that audit, and come up with an action plan of the necessary improvements. Through the work of Owen and his team, and I may bring Owen in a moment if he wants to add anything, we also look, are there any systemic issues with our audit approach that perhaps have been presenting as it relating just to this body, but is more widely. And we'll take that through our audit quality group and committee for them to look at our audit approach, just again so that we're satisfied that we're applying the learning. Before bringing on, last thing I would say is that having your work reviewed, and I say this, given that this is what I do myself day in, day out, it can be a stressful thing for teams that this can weigh heavily upon them to have their work checked. The purpose of this report is as much about giving assurance, but also promoting learning, and that this is not about holding people necessarily directly to account, but actually we can support change and improvement across our work, and we through the root cause analysis work especially, and that's how we'll do that. So if we've got a tough score, we apply that learning and taking it through into our audit work. But I can pass to Owen if he wants to add anything.
Thank you, Stephen. The only thing I would add to that is ICW identified a thematic issue in the previous year's reviews around valuations, and work was done by Audit Scotland to take action to improve that. And there's a summary statement on page 22 of the report that was not found this year. So that shows in a simple way how the inspection findings are taken seriously by the team in innovation and quality and passed out to audit teams to make sure that the improvements are put in place for the next year's audit. And that was very satisfying that hadn't happened again. And that's reflected in the very good scores, the top scores for a big council and an NHS trust as well, because that's where they were finding issues in the year before. So it does work. It's never good to get a 4 score or even a 3 score, but the important thing is that work is done by the team to identify the root cause of why it went wrong and to improve things for the next year.
Yeah. And I think you mentioned, systemic issues. Were there any systemic issues that was identified through the 3 that were poor quality?
For this year, no, there's no. I use the word thematic, which is what we use in the report, but systemic's a good equivalent. There was issues for the 3s around investment testing, sufficiency of audit evidence, and a very small audit was it sounds a bit not silly, but audit files should exist on their own for that audit opinion, and they'd cross-referred too much to a bigger audit that it was affiliated to in terms of its systems, so it wasn't standalone. That's why they need to have more evidence on the file to then back up the full flow of the auditor to get to his opinion, and it wasn't there.
Okay. And do you think sample sizes should be increased in future years? I mean, does a sort of sample size of 3 from your own in-house teams really kind of provide a robust evidence base, or is it very much a random snapshot?
I think broadly speaking, the sample sizes are right. We want to cover all the providers that the Accounts Commission and I appoint. The Audit Scotland in-house team will receive more because, as we've touched on, they cover 2/3 of the appointments. And we also make sure through that, because we cover such a wide range of bodies, some of the audits are undertaken by a different level of seniority of colleagues. So we try to match the smaller bodies or the less complex ones with some of our senior managers to give the audit opinion on those bodies, and then an audit director will more likely sign a larger body. In the event, I think hopefully maybe a final bit of reassurance, in the event that we haven't had the quality score that we want, which is a 1 or a 2, we'll do a quick follow-up audit inspection of that audit and that audit team, just to show that the root cause analysis process has worked and the learning's been embedded and there are no repeat issues. So I think having that evidence that the interventions are working and the learning and development is right broadly satisfies me that that level of sample feels about right for the time being, but we'll keep it under review.
Okay, thank you.
Well, thank you very much for that. I think at this point we can draw this meeting to a close, and I'll thank Colin Crosby, Auditor General, Vicky and Owen for their evidence this morning. And I'll close this meeting of the Scottish Commission for Public Audit and wish you all a great summer recess.